Good evening. This is Ken Long from Tortoise Capital Management, and I want to do just a quick tactical update from today's market. It's August 5th, 2009. Here's a quick look at the market health check, and you can see we're looking at the last 3 months. Here's the 30-day regression line, and you can see the powerful bullish move. The sideways pattern of the previous month, and then we went from red to green, or to blue to green. Today we had a little bit of a pullback in SPY, the first hint of slowing down in the past almost 3 weeks now. You can see ADX rolled over just a little bit, and you can see this long stretch of overbought conditions. So let's take a look at a couple of the symbols from yesterday's setups and see how they did on a day when the market gapped up and then rolled over, fought back a little bit, but had a negative day. Let's see what some of these other symbols did. First, I want to take a look at his PBI. This was a washout pattern. So here's the day that we stalked it. We can see the big sell stabilized. A setup day has 3 criteria for the washout pattern. Higher lows, the close was greater than yesterday's high, and it was a white candle, meaning that it closed higher than it opened. So we put a mechanical entry here, mechanical stop here. We looked at natural resistance points at a retest of the 50-day moving average, 200-day moving average, closing of the gap, and we would have bought at 21. Looks like 21 even on the mechanical entry. And let's see what. Okay, this is what happened in PBI today. Here's the an hourly extract. You can see it opened at yesterday's close and took off and never really looked back. And so there was a really powerful move with a decent close. We'll get a great big tall white candle. You can see we're holding 1R right about here. Now, perfectly reasonable in a stale bull market like today to have cashed 1R, but with a strong close, also justifiable to keep all or some of that going overnight and then look to get up to 22. Also, there's a possibility of a continuation pattern tomorrow if we get prices above 2155-ish. That looks like on an intraday basis we could probably add to that position as well. I want to take a look also now at yesterday we had a 5-day down pattern in UNH, but it didn't fire because we didn't get a nickel above yesterday's close. So what we really have now is a 6-day down. 1, 2, 3, 4, 5, 6 days down, and this is even a better trade on a risk-reward basis. So let's go ahead and frame this rascal up. And there's our trading range. We actually looked at this thing yesterday, so I'll put the blue line there. Now our mechanical exit would be here, mechanical entry would be here, and we'd be looking at probably here and here for profits. I would also say that just for the heck of it, that if we saw a gap down and a reversal tomorrow and saw SPY working hard, I could reasonably make a case for entering at 26.25 as a way to get a front run on the mechanical entry. So maybe a half a position at 26.4 and then with the balance of it at 27 as a way to get some price improvement. This was a 5-day down that didn't fire, but the setup still remains valid. I kind of like it that it's come back even closer to the 50-day moving average. All the more reason for it to bounce here and gives it all the more reason to work for us on the upside. So that's a quick look at a tactical update for tomorrow. I think all the setups from yesterday still remain in effect for tomorrow. And we'll be watching SPY closely to see if today's tiny little profit taking was an anomaly or the beginning of the next intermediate swing. So, thanks for your attention.